Hi, many traders are drawn to the Forex market with the goal of making millions. In reality, few get to this level. Now this week I had the pleasure of speaking to Juan Colon, the CEO of DarwinX. Now they're an asset management company. Now I recorded a Q&A session from discussions which I had with him, which you can watch in this video. Now he described how many traders he has that are currently earning hundreds of thousands of euros trading real investors' capital. For those that really enjoy the trading world and believe they could trade or learn to trade, hone their skills better, this might be a good place for them, particularly if they're low on capital. I think this is a great opportunity. Now, Juan says in this video that traders are often measured by the size of their wallets. However, what really matters is their brains. Now, his top trader has been rated as the best Forex fund manager for the past 5 years. He's in hedge fund magazines, etc. Now, you'd be surprised how much this guy actually makes per year. I'm not going to tell you. You sit and listen. But it's pretty interesting. He would have actually failed many of the tests, etc. A lot of these faux prop companies are currently putting on there as measures to traders that could go and trade with them. Juan is refreshingly straight talking. I'm sure you're going to enjoy this, so I'm going to stop this little bit recording here, this intro to the intro, and I hope you enjoy this video. Hi, today I'm joined by Juan Colon, who is CEO of DarwinX. Now, DarwinX is an asset manager, multi-asset manager broker. Well, that's at least what I've read on the website. But I thought, well, there's nothing better than actually having someone along that is the CEO and will explain to you really what they're there and what their goals are and how you can take part. So, no further ado, Juan, it's over to you.
Yeah, thanks for the opportunity to speak to you guys and the community. Always great to bring our story across. And yeah, I mean, what job do we do is, well, I think I'll just start with a founder story, because I'm a brother to what people call a retail trader, and I'm sure there's going to be lots of, and I do retail quotes and quotes trader because there's this convention whereby people are measured by the size of their wallet in a game where what matters is the brains. And I hate the word retail for that reason, because it's kind of confusing the wallet with the brain. So we're big believers that there's lots of brains out there who have potential to beat the market and hopefully make a living from the market. And the fact is the odds are stacked against them, because if you don't start with a lot of capital, then you trade peanuts to make peanuts. And there's a lot of people who believe in the fairy tales and so on, that you can take a peanut and turn it into basically a fortune. And unfortunately, there's an entire industry built of the fact that people just kind of gamble their peanuts away, and they're gone. There's then trading courses that promise how to trade a peanut for a fortune. Again, money gone after the trading course, and so on and so forth. And we're basically here to tell people that if you manage your funds with consistent growth of 15-20% per month, sorry, not per month, per year, then you will have beaten most professional hedge funds. And our job here is to get professional and retail investors to notice that you're growing monies consistently year over year. And we have success stories to prove that if you do that for 8 years running, which is what the top trader in our platform is doing, you stand to make about $1 million a year through our platform alone. Okay, and growing. So basically, we're here to get people to realize that you can't get rich off the back of a peanut, but that you can try to make 20% per year, and that there's a big rewards for achieving that, because that's the game that hedge funds are playing.
Okay. You mentioned capitalization. I mean, it's one of the biggest things I notice with traders is they may have a rather modest pot to start with, peanuts. It's probably the limitation to their ability. I think you probably agree, in terms of we were talking slightly earlier about intelligence and finance. And
well, I don't think it's a limitation in the sense that, I mean, it is obviously a limitation in the sense that you're not going to get rich by trading your own capital, because again, that's the peanuts I mentioned before, right? If you trade peanuts, the best hedge funds in the world don't grow capital by more than 20%. So you start the year with one peanut, you end up the year with 1.2 peanuts. And there's nothing wrong with the 20%. What's wrong is the peanut to begin with. Sorry for coming back to the analogy,
Yeah, yeah, yeah.
but that's what it is. Now, the problem is if you try and play the game of multiplying a peanut times 10, that can only end one way, which is
Mhm.
the money's gone. Okay. And not just the money, but also the hope. And then people jump to the conclusion that I don't have what it takes to be a good trader, which is bollocks on two accounts. The first one is a trader is not made; it's not born. It's made like like
Yeah.
an athlete is made, not born. And so
Mhm.
obviously some people have more ability. So that, but let's park that aside for now. So it's the growth versus fixed mindset. But the other one is that if you're trading small capital to try and make it through your own capital, that's just a losing game. There's no way because you're facing people who have been making themselves into good traders who are well capitalized, and there's going to be a point where some trade goes against you, and you're going to run out of capital, and that's that. Thank you very much. We love your peanuts. So you can't win that game. But you can, and everything we do at DarwinX is designed to do that, is to prove that you can grow capital by 10, 15, 20% per year over a sufficient number of years. And if you achieve that, then the world is for you because there's lots of capital looking out for consistent performers. But a consistent performer, again, is somebody who can produce 20% in a year for 5 years. That's the target and the time frame. Anybody who's thinking they can come in and make that quicker, shorter, well, they have to watch and wait until they come for the next webinar once they've learned the lesson.
Okay. Now, I've noticed is that there's a lot of prop companies around that. They've been become quite fashionable. Now, they've been approached by a number of them. I'm not going to name names because
Yeah.
I'd rather not. But some of these, well, most of these that I'm seeing, there's no real money in at all. Now, I've noticed one of the biggest ones, that's probably the most popular one now, has actually had to put virtual money across the bottom of, and it's always virtual money. It doesn't matter how good you get, it's all virtual money. What's the situation with DarwinX?
So the situation with us, and this is where the kind of the tricky part of the story, because everybody makes certain promises and everybody would like to claim that they deliver on them and the others don't. Okay, so and I think I'm just going to try and make an argument as to what sets us apart. So the first point is that we've been around since 2013, regulated as an asset manager by the FCA, and we're in the business of raising real investor capital to essentially pay real success fees
Mhm.
to people who make them. Okay, that's the business we're in. We need to convince a third party to park some money with us and then back strategies that we think make sense. That's our business. Now, when you go out to the market to raise funds, then you benchmark obviously against the best hedge funds in the world. And the best hedge fund in the world is Renaissance Capital, and they charge a 30% success fee. And they get away with it because they've been making humongous returns for investors for a number of years. If they couldn't do that as a startup manager, I think you can hope to make 20% and get some money. Now, that's the market rate
Yes.
for what a real investor pays for a
Hmm.
real strategy. Now,
Hmm.
so and that's the way we work. We basically have set up this hedge fund as a service. There's different ways to participate. We'll get into that in a second. But basically, we ask people to post a strategy trying to grow their dad's pension. Okay, they're not trying to kind of grow a peanut.
Yep.
They assume, I mean, that's how one of our setups works. We give you 100,000 euros of virtual capital designed
Hmm.
to anchor you to a situation where you do not have this capital constraint anymore. And the
Hmm.
point is, grow this capital like it's like you're running a hedge fund with a target of 20% per year. And we can show you that if you do that for long enough, we can raise upwards of 30 million for you. That's what we've done. We have actual examples with a name. I mean, that's the other thing. You go into our platform, you see a dude with a name and some trades you can see that's showing you what he's doing. And you can see that, for instance, he's made about on average 15% per year.
Hmm.
And he had a drawdown of more than 15%.
Okay.
And he's now on Hedge Fund Magazine, basically on the Hedge Fund Journal, because he's won the prize for the best performance in FX for the last 5 years. And he had a 16% drawdown, which means he would have been kicked out of every one of these prop competitions. So basically, he's a loser because he's only posted 15% per year.
Yep.
And then he would have been kicked out of any of these challenges because he had a 15% drawdown, and yet he's shown on not on our website, which he's also just on Hedge Fund Magazine's best FX performance over 5 years. So something somewhere doesn't stack up.
No,
So
no, no.
and putting out the facts out there. Okay, that's
Sure.
how it works. So that's point one. Then talking about these props, I'm just gonna ask you I'm gonna ask some questions so people get that. So a prop, if they really are looking for good traders, basically it is a job where they're trying to interview people to perform a certain duty.
Sure.
Now, how many job interviews have you paid for? Okay.
Yep. Yep. None. Yep.
None. Okay, so that's
No.
kind of already a start. So
Yep.
we're looking for traders, and for us to take you on into a job where we pay you, well, you're going to start by paying us some evaluation to see if we pay you some sort of salary, kind of step one. Okay, now it gets better. So have you gone to a job interview where somebody says, okay, we're going to charge you for the 1,000 euros, assume you had that. So you go to the interview and they say, hang on, so the salary we'll pay you will be X if you pay us this fee, but it will be 10X if you pay us 10 times the fee. And like, what is this, right? So so I think what is it? Well, it's basically, I mean, that's my take on it. It's a way for a broker, because that's really what they are, to grant exorbitant amounts of leverage to traders who hopefully are playing this game in the right way. I mean, it's basically a numbers game where the odds are stacked up significantly against you. But if you know what you're doing and you sort of get lucky in a couple of months, you can get a good amount of money, provided they paid out to you, which is another story, because these people are doing all this in order to run an age-old business, which is called CFD trading.
Yes.
CFD is called cash for dealers in the jargon, and that's basically an even older story, which is a casino where the house always wins. Okay, that's how
Sure.
it works.
Yep.
Now it's another take because the CFD business was invented, then regulated, then it got out of hand because people were offering too much leverage. Then it got banned onshore. Then it went to the Seychelles, and then even the regulators have caught up with the Seychelles. And then the next guys have come up with this idea whereby you're not putting your own money up front. In theory, you're paying as if you had to open a brokerage account for the same amount of money, but it's not technically called your capital. Therefore, it is not regulated. And therefore, it's a lot easier for these people to attract lots of people without actually having to be accountable to the FCA
Right.
or the
Right.
regulator. So that's what it is. I mean, I
Okay.
can.
Yep.
And of course, it's a way to get. I mean, it's. Don't get me wrong. If you know what you're doing and you go to a place which is at least honorable enough to pay you what they promise they'll pay you if you do what they tell you, then you've got some odds, if you've got a skill, to make a lot of money, even though the mathematical expectation of making that money is a lot lower than you open up a brokerage account with your evaluation fee and then growing that with a lot of leverage. So you can play that game, but the odds are better because it's a much more transparent game than this rules. If you trade this way and that way, but then there's that rule, you can't trade at night and you can't do this and you can't do that, because people figure out ways to game the system, and then the system basically changes the game so that you can't game it.
Sure. Okay. Talking of restrictions, then, what sort of restrictions would you put on a trader?
Yeah. Okay. So the answer is none. So there's no restrictions to trading style. There's no restrictions as to assets you trade. There's no restrictions in any way, shape, or form in that way. There
Right.
never have been. There never will be. And we're not going to talk about DarwinX Zero, which is, I think, the purpose of the call. But there's no restrictions in that way. Okay.
Right.
Now, there is one thing that gets a lot of getting used to, that makes a lot of sense, but that people need to understand. Okay. So when they trade at DarwinX Zero, they're going to be trading 100,000 euros virtual capital account
Right.
with up to 20 to 1 leverage, which is designed to be as low as possible so that people can scalp if that's what they want to do, but not
Yes.
high. Okay.
hmm
Because the point is to try and grow those 100,000 euros about 20% per year.
Yep.
Okay. Now, some people will say, hang on, I can produce 40%. And then remember, they're all competing for our investor capital at the other end.
Of
Okay.
course.
So
Yep.
that the incentive for like trader one to basically you've got trader one, he's trading with 20% per year. And then you've got trader two, which just went to this copy trading site and is taking the very same strategy from trader one. It's just that he's leveraging 1.5x.
Yep.
Same thing, same trade,
Mm-hmm.
same there's
Mm-hmm.
1.5x. End of the year, if it's winning, then the 1.5x guy he's always going to come ahead
Sure.
from the 1x guys, but he hasn't delivered one iota of value from the standpoint
No,
of
no.
investors. If anything, he's added risk.
Yes.
Now here comes trader three and says, "Hey, hang on, this is a nice game to be playing, so I can go 2x, so I can beat the other two guys." And then you get into this race to the inferno. Eventually, the risk is so high that the investor can only end up in one place, which is -1 peanut or -1 whatever it is.
Sure,
Okay.
sure.
So now what we want to do is create a level playing field so that traders 1, 2, 3 are competing on a level playing field for the attention of the investors that we bring. There's currently 140 million of investor capital in the platform. Now, the only way to guarantee this level playing field is to come up with a lot of mathematical mumbo jumbo, which essentially does the following. We tell the investor, whichever way the trader trades, as long as he trades consistently, we're going to scale everyone's positions in a way such that the investor's risk is about he sees his account moving by as much as he would see if he had invested into the S&P 500.
Okay.
Okay. So S&P 500, you start the year at say 100. You know that on 19 out of 20 months, you stand to make plus minus 6.5%. And then there's going to be the odd month where you're going to lose at least 6.5% and a lot more, potentially like 12, 13%. That's kind of the expectation that they've got. And then you project that going forward over 1 year, it could be like plus minus 30%. There's a mathematical element to
Sure.
that. And that mathematical element is a function. Let's do the same thing for our trading strategy. Okay, so let's go back to this 1x guy. How much could an investor's money move over 1 month? Well, it's a function of how many trades he takes. Obviously, the more trades he takes, the more it could move. How much size he trades. The bigger the size, this is the 1x, 2x situation. The bigger the size, the bigger the odds for a thing. And then the last one is the longer he hangs on to trades, then the more movements can be, because more stuff can happen in 1 day than can happen in 1 minute.
Sure.
All other things kept constant. So what we do is we look at the way traders are trading. We ask them to trade as consistently as possible. We don't care if it's high risk or low risk or whatever, because remember, this 1x, 1.5x doesn't really matter. And we say, okay, well, we'll look at how much the account would move. We look at how much the 100,000 move, and we want you for these 100,000 to not move then by more than 6,500 per month.
Right.
Okay, that's the idea, because that's what the S&P, like 100,000 euros invested into the S&P 500 would do plus minus 6,500 most months. Okay, so we want you to trade your strategy, sizing positions in a way such that that's what comes out of it. So you trade whichever way you want, but just size the positions in that way. And then if you don't, because for instance, you trade in a way such that it's twice as much, then it's not going to serve you will not get one iota of an advantage, because we'll basically half the trade sizes than any investors are going to play at the other end.
Right.
Okay. So what are the restrictions? You can trade any way you want. There's 15,000 ways. I mean, there aren't that many, because clearly people lose. But if you know how to skin a cat, then by all means go ahead and skin it. But don't think that by trading 1x, like 1.5x as 2x, you're going to get any leg up on all the other competition, because we'll scale your trades down to that. That's the only limitation. So whatever investors get is a scaled version of your strategy. If you trade more risk than we want for investors, we'll scale you down. If you trade less risk than investors, we'll scale you up. And we're going to do the same thing for all the people that are competing for the capital. So it's a bit like a football referee. Everybody thinks the referee was unfair. And then if you hear that from both sides, then you know you've been a good referee, generally.
Yeah.
So,
okay.
I've been talking a lot, but that's the idea. So no restrictions, but trades get scaled to level the playing field.
Yeah, it makes complete sense. Otherwise, you can get someone just going off and blowing it for everyone effectively.
Which is, and that's the thing. So, and that's important, because the reason we do all this is because we, as an FCA regulated asset manager, manage third-party funds from this real world. So there is real funds, and there's money going to the market. And if this guy goes we go through the 10x iteration, because of course there's a race to the bottom, or to hell, really. Then the investors' money blows up, and the customer comes to basically complain against us because we are the asset manager facing the investor, not the trader. The trader is just
Of
getting
course.
a free lunch. I mean, there's
Yep.
a cost to it, but the trader, I mean, if he wins, he makes 15%. We charge the investor 20%, we pay him 15%. If he
Hmm.
loses, then it's too bad for the investor, but doesn't cost the trader one bit.
Right. Right. Okay.
Mhm.
Explain to me the process. So if I'm one of my community, and I sort of say, okay, Kim, you've
Yeah.
been talking about this. What do I do? How do I join it? What have I got to do?
Okay. Right. So there's coming back to what we're looking for is a way to source the strategies. Now, and there's three ways to get the strategies. One is the traditional what we started. We've been doing since 2015. We call it classic because to us it's classic, not because it's classic to anyone else, but that's how we
Hmm.
are. It's basically we have a broker, an FCA regulated, and we've got two. One regulated in Spain, one regulated by the FCA.
Hmm.
So you open a live account to trade with our broker, and you basically don't pay much because we try and be as competitive as we can. And then in addition to that, if you're good, we'll get you capital.
Hmm.
Okay, so you've got €1,000. Instead of wasting them away into some dubious thing or some bollocks trading course, you open your own brokerage account. If you're ready to not lose that, then you get all this investor stuff for free.
Right.
So that's option one. Then option two is same thing, but instead of opening a brokerage account with our broker, you open it with Interactive Brokers.
Okay.
Okay, so you trade with Interactive Brokers, same thing. You get all that you get from Interactive Brokers. You don't pay anything extra. And if you're good, then we pay you. So it's basically trading with Interactive Brokers the way you would, but then you get paid. So it's kind of hands down the better choice. And
Okay.
then we know that most people, much as they don't publish that on Twitter, lose their shirts when they start out.
Yep.
And then a lot of people also don't have the trust to be able to capitalize on an account. Maybe
Hmm.
they've got the money, but they don't have the trust, or maybe they've got the trust, but they don't have the money. And we don't want to get them to the peanut game. So there's a third option, which we call DarwinX Zero, which is a subscription for €38 a month, whereby one trades this virtual account to build a track record, the track record that will hopefully get them to the hedge fund magazine in
Hmm.
one day. And they basically build up that track record for $38 a month. They could build up their body in the gym, or they could build a track record for $38 a month. And then realistically, it's going to take about 3 years to get investor attention because that's how the real investor world operates.
Yes. Yes. Yep.
Anybody can get lucky for 1 month. A lot of
Yep.
people can get lucky for 6 months. You still get a lot of people, but then getting lucky for 3 years, that's pretty lucky. So people start kind of paying attention. Maybe it's not luck. Maybe there's something that's going
Yep.
on here.
Yep.
Now, because we know that's a long time to wait, and then there's going to be all these calls, siren calls from the prop funds to kind of this and that and what have you, then we as an asset manager, invest some of the revenues we make from the 140 million of investment that we've got at the
Yes.
back
Hmm.
into providing virtual allocations, which are basically cash payments that we offer to people to show them that they're on the right path.
Right.
Okay. Now, these range, one can land from as early as the first couple of months an allocation. About 10% of people land one of these virtual capital allocations that we do every month. So,
Hmm.
I mean, part of these people are going to ask us, how is it different from a prop? And the answer is it's not a prop. Forget the prop thing. So we're
Yep.
going to play the
Yep.
hedge fund game. How does
Yep.
the hedge fund game work? It's like you post a track record,
Hmm.
you own up to your good months and your bad months because
Sure.
there's no point kind of pretending to be Twitter champion of the day. This is a long-term thing. So you post that track record. Hopefully, you stand out enough from the crowd to attract investor attention. So
Hmm.
you land some investor capital, and that investor capital you grow over a certain amount of time, and then you get paid for the upside, and you keep repeating that for more and more enough months, so you get more and more investor capital, so you get a bigger lever to grow your thing. Okay, so that's kind of hedge fund game. It's kind of trade, show your history, stand out, get capital, produce success, get paid, repeat.
Right.
That's exactly the way that our thing works. Every month, we order everybody on this level playing field that I've explained before. So remember, no gaming the system by taking 2 times the risk or whatever. It's just like everybody's on the same level playing field. And then we look at who are the guys who've posted the best returns over the last 6 months, rank order them, and say, okay, the top guy is going to get €375,000 of capital that he can grow over 3 months. That's
Right.
the first application. So the job is these 375K you just got, you got to grow them as much as you can within the scaling thing. No payouts. I mean, the target is 20% scale down to 3 months, whatever it's like 4.5%, whatever it is. If you grow this thing by 4.5%, then you stand to make about, well, actually 4.5 times 15% of that, which would be about 60 basis points on 400,000 euros. That could be 2,400 euros.
Right.
And next month, same thing. You keep it at 375 you've got another 2 months running by this time the next month, and then you get the next one and so on and so forth. So you can build up 500,000, whatever it is, so that it's actually quite easy. So 10% of people land an allocation on any given month. And it's reasonably doable to get the service for the 38 bucks for free because it's subsidized. Remember, you can always get the same service for free with a live account. So if once you've proven this for enough months, you're making money, there's no point to paying 38 bucks a month. You open a live account with a broker and then you get all this thing for free. But all the time you're playing this game of every month, I try and grow my capital. I might grow it, I might not grow it. For sure, I'm not going to blow it up because that's the end of my track record. I keep going, and hopefully at the end of a certain tunnel, then I will have made hundreds, possibly thousands of euros from DarwinX because they're investing in the next, in their lifeblood, which is the next generation of good managers.
Yes.
And all the time I'm going to see the top guy at the top to see that this is not horseshit because there's a guy who's making the money. You can actually invest in the guy. That's the beauty of it. So it's not a prop in the sense that it's only the prop that makes money. It's everybody can invest in everyone else. So everyone challenges everyone else. They don't challenge the prop. They challenge everyone else because it's the real game. Okay, so you're challenging all the others for this, and if you can't win, at least you can invest.
Yes,
it's an open ecosystem where everybody pools the strategy, and the fittest survive. That's why it's called DarwinX.
Right. Okay. Brilliant. With the investors that you get that come in to invest, where do they come from? Do you promote this externally?
Well, a lot of the investors are basically the traders themselves because you basically say, I've got the strategy, I've seen this guy who's beating me. Well, I can't beat the guy, but at least I can invest in him. So that's the first one. Then the next one, it's actually it's good fun, by the way. I mean, like I encourage you to download the DarwinX app. I mean, I've got 200,000 euros of my own wealth invested in traders. So a lot of that is really word of mouth. The traders themselves, people who are close to the traders, friends and family of the traders. So there's a fair amount of that. And then, of course, once you've done this for enough years, you start to get good traders. So you can actually, they can make money for real in the market. It's not that we say it or that we know. It's actually the investors are backing it and they're actually making money. The FCA can see that our investors are making money.
Sure.
Then you can go speak to more and more professional investors. And then there are investors investing 3-4 million in the platform, looking at ways to basically build a track record to scale that thing up. And we're at the beginning of that curve. I mean, it's been hell on earth to get our company to where we are today, because if you build one of these marketplaces, you've got bad traders, no investment, and no incentive for good traders to join. So somehow you have to grow two sides of the equation. But once you've got enough of it and you've got enough good traders, then all heaven opens up, because we can then kind of eat our cake and, bake our cake and eat it too. Because of course, you've got the good traders, the investors make money, there's more investors, you get better traders, and then there's a feedback loop, which is everybody wins with each other, and it's not the house making money from the players, but it's basically Adam Smith's invisible hand, where everybody's competing with each other, but as they do, they build trust so that they can beat the rest of the market. So DarwinX is people in DarwinX against the market, and there's more where that came from, because the market is infinite if you're playing the real game.
Yes. So your successful traders, what sort of returns are they're on the sort of 15 to 20% a year?
The best guy is 15%. I mean, I think the question is not the returns, is the number of years where they've posted the returns. So the most successful guy's done the 15-20% for 8 years. Obviously not every year. So like some years he'll make 15, some years he'll make 5. He hasn't lost, to the best of my knowledge, on any 1 year. That's kind of the best. I think there's plenty of traders with 4 or 5 million of capital with about 10 to 15% compound return. Right. And I think DarwinX is just, it has been a proof of concept, right? Because this whole thing, to have a loony coming from Spain and creating this marketplace where retail traders can kind of showcase this to invest. It's just like, what are you smoking, right? But the thing is, like, now they've found this thing and they say, hey, I'm actually making some money, and this can only get better, because once you get the ketchup flowing, then there's more ketchup where that came from. So I would not look at what it is today, but the opportunity that it can be in the future, especially knowing that you're going to measure yourself up against peers, no hiding,
Hmm.
no kind of this guy's riskier than me. This is like, just come in there, show an index. Everybody can see that index real time. There's no Twitter champions. Like, I'm the best trader and whatever. Like, they only come in on Mondays. On Tuesdays, they've lost their shirts. So this is
Yeah.
a like-minded community of people who are out there to prove their own track record. As everybody competes, they prove everyone's track record. And we're pooling trust, essentially, to attract investor confidence. The more trust we build, the more investor capital, the more the incentive to join. And that's the game we're trying to build here.
Okay. And let's say a trader's got his own automated system, or
Yeah,
is
that's fine.
as
No rules
opposed to
against that.
copiers, but that's fine.
You can skin the cat any way you want, as long
Right.
as you're not playing the game to increase the risk. So the
Right.
target
Okay.
is 20%. You can do it whichever you want. You could be dancing naked in the moon or whatever it is. Just like, if you make money, then that's what it's about. It's hard enough like that. There's no further restrictions.
Do any of your traders group together as yeah, in small teams and sort of
Yeah,
trade as a team, or
yeah, by all means. So one of the things I'm proudest of after all these years, and of course we hail from Spain, but I've learned that there's lots of communities of people talking about their Darwins. I mean, like the strategy that we create, like the so-called fun, we call it the Darwin, and then they basically create Telegram groups to talk how everybody's Darwins is doing. There's people who will travel from the north of Spain to Madrid, and from the south of Spain to meet each other in person, face to face, because they've all got to know each other
sure,
through the
sure,
DarwinX interface. So there's a fair amount of, I mean, let's face it, the internet's full of one day success stories that then come and go, right?
yes, yes,
And
yes,
it can feel quite lonely to think that, am I the only guy who's not nuts in this? And you're not, but it's hard to find people. So once you get to coalesce against one place, then you make friends, right? Because you're like-minded people
sure.
playing the
Hmm.
same game. So yeah, there's a fair amount of that going on. And we're actually looking to promote more of that by creating teams
Right.
within the DarwinX platform. So there'll be competitions within the teams as well as across teams,
Hmm.
because hey, it's a level playing field, which is as close as can be to the real game, because it's basically built on top of. I mean, it's the starting point to the real game, and everybody's playing on the same platform. And you're going to trade from day one on your first month of DarwinX, you're going to be on the same rules that the 8-year guy with the 1 million per year.
Okay.
Same for everybody.
Right. Marvelous. Okay. It seems like a no-brainer to me. I'm sitting here thinking of all the benefits in terms of how it can actually help people trade properly as opposed to trade to their means.
Yeah, I think I would like the best traders I've met, to them, and don't get me wrong, money. I mean, you can have lack of money problems. That's a real problem, right? But
Hmm.
I think what drives these guys is not the money. I think the money is a validation of them having, gotten better over the years and being able to beat the market, because the market is
Sure.
everyone else. So, and that's what drives them. And I think if you come into trading because you want to make money, I mean, it's just not going to happen.
Hmm.
It's not going to happen. I mean, it's basically you come into trading because you love the markets and maybe you want to prove to the others that you're better than somebody. If you just come in for the money, then it's not going to happen, because you have to be thinking about this, 24/7 to beat the other guys. And you only do that if you love what you're doing, even if there was no money in it. And the bonus is you do that well, and then there's tons of money in it. But the
Sure.
money is a byproduct. It's not the thing in itself. And I think I mean, I've seen so many people, they started at 15, 16 and so on. It's a passion that's with them, and it's a passion for life. And even if you don't make all that much money, you're still learning financial culture. You're going to be in the news. You understand what's going on. There's going to be lots of other decisions. They're going to be easier for you because you've
Hmm.
understood how the game works, right? But you got to do it for the love of it.
Sure.
And you should not spoil it for trying to rush things, because of course, everybody's young. I've turned 47 recently. I mean, at 15, I thought I was like the next big thing. I mean, like really, there's
Hmm.
no one as clever as me. And then there comes life and then shows you, okay, maybe you're not that bad, but you're kind of, you're not world class in many things. But still, you can continue working your way up. So you're humble. Today you're here. You improve to tomorrow and so on. And over time, you'll come as far as you can go. And if that's very far, then fantastic. And if it's not, then at 38 bucks a month or 1,000 euros traded wisely, it's not going to cost you a fortune. It's not going to cost you your marriage. It's not going to cost you your holidays, which is what a lot of these people are throwing away. I mean, it's
Sure.
peanuts in terms of trying to make a living, but it's your holidays that you've just wasted on one stupid trade.
Yes. Yes.
Or basically even more. You just go ahead. Okay, there goes 3,000, three grand in some bullshit course by some Lamborghini guy that's telling you some bullshit. I
Absolutely.
mean, or you go to this supposed like thing, we want good traders thing, where the more you pay, the higher salaries. What's that? That sounds like if it
Sure.
walks like a duck and it talks like a duck, then maybe it's just like it's yeah,
It
it's
is.
BS, right?
Yeah.
Yeah.
Absolutely. Absolutely.
Um,
No, you guys, Sal sent me over a link which you can actually discount your starting fee. I understand, which I'll put on the bottom of this video somewhere down there, somewhere at some stage. What I'm going to do in terms of encouraging people to do this is I'm going to give my time for free to people that sign up and set up a particular community for people that want to learn and do it and pick my brains in the mornings. I do a
mhm.
morning session and they can do it. So there you go. There's something to go with what you're offering.
Well, you've made my day, Jim. I mean, that's
Yeah.
really so. One thing that's working very well with our communities is to have a courageous leader like you, or courageous members who basically go ahead, start the account, and then we dissect what's going on with the tools that we make available
Hmm.
to it. Because that's the other thing. There's a lot of toolkit that comes to diagnosing your own trading.
Yep. Yep.
And that this whole thing, which I've just kind of described in what sounds like pretty abstract terms, it actually isn't that bad. You basically trade 100 grand in a virtual account, and then you see this index moving up and down, and then you see everybody else's indices moving up and down, and then you can start talking about what's going on in the market and seeing places to improve copying stuff that people do from each other, not the trades themselves. It's like
No,
how they
no.
size the trades, how they not let the losers run and and cut the winners short. The sort of things that kill you. Because I mean, being a Spaniard, I'm a big fan of Rafael Nadal, and the one thing he said is that the one thing that sets apart world class players from the very very good players, because you got to be pretty darn good to be like top 500 in the world, is that they win matches on shitty days.
Yes.
Uh, and that's how
Yep.
you do the things. Like, you make your money on the good days, but you don't lose it on the bad days. And that's
Yep.
key to,
Yep.
making it. I
Yeah.
think if somebody hearing this wants to take a step kind of forward, I'd be delighted to have a session with you guys where we explain the stuff. I could even bring my brother, who's the one that explained the whole thing. And then once you see it, it gets a lot better because this shared accountability between like-minded people,
Hmm.
it works miracles. And if they're lucky enough to have someone like you on their side, yeah. And as I said, we're building this Teams feature, and our goal is to showcase how well all the members of a certain team are doing,
Yes.
to send members to that team, which is the
Hmm.
exact opposite of the other stuff. Like we want to attract people to send them to the right places instead
Yes.
of
Sure.
people and getting paid for sending them to the wrong places, which is
Hmm.
there's a fair amount of that going on, as we both know.
Yes.
Um,
Yeah. Indeed. Okay. Well, look, it's been absolutely brilliant talking to you. I think certainly it'd be good to meet you and your brother. We'll do a webinar for people that sort of sign, and we could
yeah,
do something some more and get people really on board and get them successful. At the end of the day, that's all I'm there for is to try. Yeah, I don't want to throw them the fish. I want to teach them how to fish and get them fishing for themselves and
yeah.
be successful in their own right. And yeah, this I think is a really good opportunity.
Well, that
So
is success, right? I mean, it's
yeah, absolutely.
yeah. Mhm. Okay,
Okay.
well,
Well,
if you want to, like, I think whoever just volunteers their four-letter ticker to this, I'm very happy to basically offer some goodie. We've got some fantastic personalized stuff with animals and so on. So just you tell me, the first guy who comes, we'll just figure out something cool to
okay.
to get them. Not money,
Brilliant.
but something which is more valuable than money, like
Absolutely.
stickers and mugs or whatever it is.
Marvelous.
Okay.